Hello everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to yet another promising edition on the Extra and Speed Live. And before we begin, I would like us to do our daily routine by confirming that we are all good to go this morning. So I would like to see some feedbacks. If you can see my screen and you can hear my voice clearly, please let me know in the comment section. So I would like try to load up my charts right now. I think my chart is finally up. I ran it about 30 minutes ago and it's quite fine. So let me run that again and let's see. Beautiful. Okay, we still have it running and thank goodness for that. So let's see what we have here. I can see 9175. Good morning to you. Thank you very much. 3071. Good morning to you. N Style 90. Good morning to you. Falco 73687. Hello, Carrie. Good morning to you. Glad to have you around this morning with us. 20869, good morning to you too as well. So I think with this handful of feedbacks, I want to assume that the audio and the visuals of this session is quite okay. So on this note, I welcome you all to yet another promising edition of the Extra Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, we shall be taking another fresh new look into the market using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of all of the assets on our watch list. And in fact, this week we have been monitoring four major assets, which includes the US All Spot, the US Tech 100, popularly known as the NASDAQ. We also have the USDJPY and of course the XAUUSD, which is popularly known as the gold spot. And in fact, on all of these assets, they have been doing pretty well. And remember that today is a crucial day as we look forward to the most anticipated interest rate decision, that is the US Fed interest rate decision coming up much more later in the day. And today promises to come with some volatility, and what we want to be doing here as technical traders is to try and position ourselves in such a way that we can capitalize on the direction of the volatility. For those who are joining us for the first time, you are highly welcome on board and glad to have you around with us this morning. You might be asking, what is it that you are doing here? Well, as technical traders, we come here on a daily basis in anticipation of both the London and the New York session, where we come to review how well our previous positions are doing. That is, if we have any positions running, while we also use the information we identify on the chart to position ourselves for the New York session every day. This happens 10 a.m. UTC, 11 a.m. West African time. So I would encourage you to stay tuned in so you don't miss out on any of these insightful ideas we will be deliberating on today. And in fact, the more time you spend with us, the better you get in understanding how this works and eventually be able to use the information you have gathered here to make your own independent trading decisions. So once again, I welcome you all on board. So with that being said, here we shall be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar. And for those who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that we need to position ourselves in such a way that we can capitalize on any of this potential move prior, during, and even after this event. So on the economic calendar, we normally focus on high impact event coming in from the economic docket on our watch list, and based on the asset we have for this week, we are going to be looking at the US economy and the Japanese economy. Now for today, Wednesday, September 20th, we have something from the US, and that is the most important Fed interest rate decisions. And for those who don't know, the Fed interest rate decision is the central bank's verdict on whether to raise, lower, or maintain interest rates. And this, of course, impacts the borrowing costs and economic activity. It's a critical tool for the Feds in managing inflation and supporting economic stability. And from the news we've been hearing in the last couple of weeks, and from the data we've been seeing from the US economy docket, major key players are suggesting that there's going to be a pause to interest rate decisions today. And as a result, we are looking forward to a consensus projection of 5.5%, which is just as the same with the previous month. Will this be the case? Are we going to be having a pause in interest rate? Well, we don't know yet until the actual data come in. But one thing we are going to be doing here as technical traders is to sniff through the current market structure. Let's look out for patterns and structures that will give us an hint or a clue into what is likely going to be happening during that time. Then we also had other events which will be happening simultaneously. We have the Fed monetary policy statement, we have the FOMC economic projections, and we have the interest rate projections. And of course, the FOMC press conference which will be the culmination for today, as the FOMC is a public address by the Federal Reserve Chair following the interest rate decision, and of course, it will be providing us insight into the central bank's economic outlook, policy decisions, and the rationale behind these decisions that were made, helping guide market expectations and investors' confidence. So, with all the information we have gathered here on the economic calendar, it is time we zoom right into the current market structure to look at things from a technical standpoint. So, as usual, the first asset we are going to be looking at today is going to be the US oil spot. And on the US oil spot, we have in the last 24 hours, we were opportune to capitalize on the bearish momentum, though the week started on a bullish note as we bought at some point in time at the beginning of the week. I think we had a couple of buy positions at the beginning of the week before this bearish momentum began. Now, before we go into the details of what our expectations will be like today, I would like us to run through what the beginning of the week was looking like and what led to the decisions we made. So at the beginning of the week, we acknowledged that price was caught within a range. We had a confinement between the $90.50 level and the $90 area, which was serving as our key level for the week. And you know how we do it whenever we have this kind of range like this. We want to be looking out for signals in the form of a breakout or breakdown of that range to give us an opportunity to trade. Now, with the situation we had here, there was no point in time price broke down that structure. Instead, we kept on seeing price breaking out of the $90.50 level multiple times, making us position ourselves above that area. And since the beginning of the week, we have been buying. We had the first buy position triggered. We had second buy positions at the breakout of the $90.80. And remember, we also added one more during yesterday's trading session as we saw price continue to climb and find new highs. And as at the first half of the week, we were quite profitable. As you see here, the first buy position moved about 140 pips, while the second position moved about 100 pips. The third position moved about 70 pips before this bearish momentum came in. So as at the first half of the week, for those who took advantage of this multiple entry, you will be having a minimum of 200 pips to have caught on this one. That is, if you had moved your stop losses accordingly to secure your positions. So once again, congrats to everyone who had been part of that bullish momentum. Now, during our live session yesterday, we also took into consideration the potentials of sellers. And from a psychological standpoint, whenever price action finds new high, there are always tendencies of some retracement or consolidation or chopper situation of sorts that could happen before price finally acclimatizes to that area. And it's the same thing that we saw here yesterday. We saw how that area between the $91.50 level and the $91.15 area was being characterized by some selling pressure around that area. And one of the things we said here yesterday is that if sellers are going to be taking over this market, we will need price to break down that ascending trend line, one of the ascending trend lines here, which also lines up with that level at the $90.80 area, as you will see me highlight here on your screen. And one thing we said is that a breakdown retest of the structure will be giving us a beautiful opportunity to join a bearish move. And look at what happened here exactly during the later part of the New York session yesterday. We saw the breakdown of structure. Price came back to retest that level, and all the way price continued to nosedive, breaking down the second major ascending trend line, breaking down the $90 level, and of course breaking down the $89.25 area. And on this one, you will have a minimum of 2 positions running in profit on the sell move that we saw here. Now, for the first sell position here, we saw price moved about 160 pips on that one. The second one right here moved about 100 pips, and the third one moved about 40 pips before this bullish momentum we're noticing now just took over the market. Now, for those who took advantage of the sell positions too as well, kudos to you for being on standby to capitalize on that move. Now, with price move considerable well in our favor, you know how we do it in this community. Whenever price moves in our favor, we want to be moving our stop losses to secure this current position so that we can guide our position against any sudden pullback that will happen here. And in fact, if you still have a sell position running at this point, I will be suggesting that anywhere around the $89.90 and the $89.80 level seems most appropriate to lock in this position while we wait and see how the market will be reacting around the structure. So with a well-secured position at this juncture on the market, what is going to be our next line of action for today? Are we going to see the beginning of another momentum of buy pressure to continue the uptrend that has been established in the last couple of months, or are we likely going to be seeing a continuation to the downside? Now, before we go into the details here, it is appropriate that we take a quick look at the higher time frame to see how price action has been evolving on the long-term perspective before jumping into a conclusion on the 1 hour time frame. Now, to do this, we shall be going into the 4 hours time frame, where I would like to refresh our memories as regards to what we saw at the beginning of the week around this area. Now, on the 4 hours time frame, we had a simple setup here, and in fact we took into consideration the nature of price action in the last 3 to 4 weeks. And what we saw here is quite interesting. Price action has consistently found higher highs and higher lows, which further emphasize the strength of the buyers in this market. And in fact, when we connected the series of higher lows here, we have a couple of ascending trend line, which of course we mentioned will be one of the parameters we shall be using to guide our trading activities for this week. And of course, if price continues to remain above the trend line, we continue to look out for buying opportunities. However, we mentioned that if price breaks down that trend line, then we will begin to anticipate a potential momentum shift. Now, let's zoom right into the current structure where our center of focus was. Now, when we zoomed into the current structure, we had a couple of levels that we identified, and one of them is the important one and that is the $90 level, which we agreed will be serving as our key level for this week. And of course, when we have key levels, we want to look out for buying opportunities above our key levels, and of course selling opportunities when price breaks down the key level. Now, if we look at what has happened here in the last 24 hours, it's this impressive impulsive move to the downside, this bearish impulse leg, which is a reflection of some profit-taking activity after price action skyrockets to the highest point it has been since the beginning of this year. Now, with the situation we have here, a strong impulsive move to the downside, taking out all the structures we identified at the beginning of the week, the important one, the key levels, the $90.50 level, and of course, both of the ascending trend lines. Now, from a technical standpoint, whenever price action breaks out or breakdown of key structures such as the ascending trend line and the key levels we have here, there are chances that we can see some retracement back to retest the structure to incite another continuation to the downside. So at this point in time, we are in a dilemma where we are not sure if price will continue to the downside in this case scenario. Hence, we want to look out for structures that we will be using to guide our independent trading decisions for today. So in this regard, if you look at what has been going on here in the last, how many hours now? I think about 9, 10, 11 hours now, you will see that we have noticed some buy pressure resume somewhere around the $89.20 level. So we do want to be marking that level, and I think that level is duly marked out on the 1 hour time frame. So when we go there, we will see how to use that. Now, we have noticed that in the last 11 hours, price action had consistently found buying pressure around this area. Now, the question now is this buy pressure we're seeing here a retracement of that impulsive move where price will come back into structure, maybe the $90 level, the $90.50, or any of this ascending trend line where the appearance of selling pressure around the zone will be a good opportunity for us to join the trend continuation to the downside. So this is what we are going to be looking at here. Let's see how price reacts to that area. Then we want to be making a decision based on what happens around that structure. But I'm of the opinion that since we have an impulsive move to downside, it is likely that we will be seeing a downtrend continuation. But don't let's jump into conclusion, but hold on to see how the market will be reacting to the zone. So I will be scaling down into the 1 hour time frame now to give us, okay, so I think, okay, let's do this first of all to identify the potential zone where a retracement might end to incite a downtrend move. And to do this, we will need our Fibonacci retracement tool, run it through the previous impulse leg, and we want to be looking at this area. Normally, we should be looking at the between the 78 and the 50.00 area, which will be serving as our golden zone area. So I will be labeling this area as a potential sell window. So you do want to be marking this one out on your chart right now. And I always like my golden zone area to be a little bit lighter, so we give it a light yellow. Here we go. So we no longer need this. So we want to see how the market is going to be reacting to that potential sell window. So if price comes into this area and we begin to see something like double bottom structures, selling pressures as buyers find it difficult to climb up and sit above the ascending trend line, then we will be opportune to join the bearish move. But if price climbs up the ascending trend line and we begin to see buy pressure above the ascending trend line, then this could be a beautiful sign to join an uptrend continuation. So now with the information we have gathered here on the 4 hours time frame, let's scale back down into our 1 hour time frame. Now right back into the 1 hour time frame. So let's zoom out a little bit. Now remember, we've secured our sell positions for those who still have a sell position running, and right now you will see that we have a level around the $89.25 area, which has been duly marked out, as you will see here. Then we also have another one right here. Hold on a second. I think around the $88.78. So we do want to be marking this one out too as well. $88.75 level. So I will be looking forward to more selling opportunities if price goes on to break down the $88.75 and of course the $89.25 area. However, if you look at the structure here since last week Friday, you would notice that as soon as price got into the zone, we saw the resumption of buying pressure around this area. Now we saw what happened on Friday. We saw buy pressure. We saw how it became difficult for sellers to settle in here. And in fact, in the last since the early hours of today, we saw another momentum in buying pressure around that area. Now, will this platform hold for another wave of bullish momentum, or is it just a platform that is inciting a retracement of that bearish impulse like we saw yesterday to incite the downtrend continuation? Well, time will tell. Now, with the situation we have here, let's take into consideration the impulsive move. So we had this one, price came back around here, it dropped into the structure, and finally it's back into this area. Now, I'm beginning to see something like a reversal pattern that will incite that retracement move. And if we want to be part of this counter trend opportunity, then we need a neckline we will be using to guide our decisions for today. So I would like to have a neckline here at the $89.65 area. And one thing you want to be doing here is to give it a unique color so that it will emphasize its importance compared to the previous lines we have here. So we will be using this as a neckline where a breakout retest will be welcoming buying opportunities like this. Now I will want to drop this one right here. So breakout retest, welcome buying opportunities. Then we can ride this move all the way up. Then if price now gets into that sell window around that ascending trend line or anywhere around this area, we move all our stop losses on the buy positions, secure the current position while we wait and see how market participant will be reacting to that zone. Now, if selling pressure resumes, then we would look out for selling opportunities where we will be taken out of the buy position and run that move all the way to the downside. But if instead we have a breakout of the $90.80 level, retest of structure right above the ascending trend line with continuous sign that sellers are finding it difficult to break below, then we look out for more opportunities to buy the US All Spots for today. So it's a simple setup we have here on this chart. So we shall be waiting patiently to see how the market is going to be reacting to the zone to see what our next line of action will be. So I will do a quick recap of what I'm saying here. Hold on a second. So right here now we have a level at the $89.65 area. Let me highlight that a little bit. So I'm looking forward to the breakout retest. Remember what I said here, breakout first of all. You don't want to be doing an outright buy within a counter trend position. Okay, so we want to wait for the breakout of structure happen. That's on our 15, 5 or 10 minutes time frame. Retest, then we want to join that bullish move while we wait and see how the market reacts to the sell window, which lines up with that ascending trend line that was broken yesterday, to see if we are going to be having a retest of structure to incite a bearish move to the downside or a break above to incite a buying opportunity. So what happens around this area will determine what our next line of action will be. So you do want to be marking out those levels on your chart. However, if price does not continue to the upside and instead it continues the nosedive, then I want to be looking out for more opportunities to sell below the $88.75 area. So let's see how this will play out in the next couple of hours, and I encourage us to exercise patience and allow our structure to mature before we jump into any positions here. So these are my views on the US All Spot for today. You do want to be marking out this level as you will be needing them as a reference point to guide your independent trading decision. And I don't know if you have any questions as regards to my explanation so far. If you do, feel free to let me know right in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next financial asset on our watch list. All right. So, in the absence of no questions, I want to assume that we are all on the same page. So, we shall be moving on to the next financial asset on our watch list. So, the next asset on our watch list for today is the USTech 100, which is popularly known as the NASDAQ. And in fact, the last 24 hours we had a very strong bearish momentum which moved about let's see how many pips that was. We saw the first position move about 130 pips, while the second position here moved about 80 pips in our favor, giving us roughly over 200 pips. And of course, I do hope you moved your stop losses accordingly to secure the current position. And if you had done that, you must have been taken out of this sell position with a modest size of profits. And well done to you for being on standby to have capitalized on this move. Now, let's look at how the week started for us here in this community. Initially, we had a range where price was confined, and that was between the 15,233. And as we watched on, we saw how the range expanded into the 15,150 over the last 48 hours, further emphasizing the level of indecision in this market. Now, another thing that we also acknowledged here at the beginning of the week was this, hold on a second, was the breakout of the resistance line, which gave us a buy opportunity, but unfortunately, we were taken out of that buy position in a stop loss. So at the end of yesterday, we were able to recoup the loss we incurred at the beginning of the week, and thank goodness for that. And let's see how we are going to be maximizing the potentials of this market structure at this point in time. Now, in preparation for today's trading session, what is it that we are going to be doing? How do we intend to capitalize on any potential trading opportunities in this market? Now, before we go into the details here on the 1 hour time frame, I would love us to run through the higher time frame to have an holistic perspective of what is really going on in this market. And remember that fundamentally, we are looking forward to the interest rate decision, which has a lot of influence in this market. Even the anticipation of this event would reflect on the chart as price action. Now, scaling up into the higher time frame, I think we should go to as far as the 4 hours time frame, I guess. So on the 4 hours time frame, you will see, hold on a second, let's start from the daily time frame. I think that was where we started at the beginning of the week. And at the beginning of the week, we saw this ascending trend line, which emphasized the strength of the buyers in this market since the beginning of this year. And with this scenario here, we have an ascending trend line to work with, as you will see here. Beautiful ascending trend line as price consistently respected it. Now, zooming into what has been going on in the last couple of months, we had a key level we said we were going to be using to guide our trading decisions for this week, and this is right around the 15,150 area. And if we go to as far back as the month of June, you will see how this zone or level, if you want to call it, has played a major role in determining the direction of price action. And in fact, last week we saw our price action came back to settle into that structure. Now, what makes this structure more intriguing is the fact that it also shares a confluence with that ascending trend line we identified earlier. Now, the question going into the new week was, will price respect that area one more time to incite an uptrend continuation, or are we going to be seeing the breakdown of both the trend line and that key level to incite a sell-off? Now, if we zoom into that confluence right there and looking at how participant in this market has been reacting to the zone around our key level and ascending trend line, you will see that despite the strong sell momentum we saw here yesterday, the whole structure since the beginning of the week is still looking very indecisive, as price action is confined within a range between the 15,250 and the 15,150 since the beginning of the week. And of course, it's not surprising, as we all know that majority of the key players in the market have stepped aside waiting for data to give a clue of where we shall be going. But from a technical standpoint, when we look at the structure closely, you will see here that we begin to notice that this area here around the 15,150 and our ascending trend line has been a major barrier for sellers in this market. As you will see, every attempt by the sellers to break through the structure has been met with strong resistance from the buyers, hereby giving us wicks that looks more like buying pressure trying to push price to the upside. And of course, with the scenario here, it is likely that we are going to be seeing a bullish momentum. Now, to have a better perspective into what is going on here, we scale down into the 4 hours time frame where we saw this whole scenario. And if you look at the structure closely, it appears that we begin to see the transition of price action into a reversal pattern. As you will see right here, it's looking more like a reversal pattern to me, where we have a neckline, something like this as the neckline right now. Let me bring up my line chart. So we're having a neckline that looks like this. I'm going to remove this extension. I don't like having extensions on my lines. So it's looking like we have a neckline which is coming in form of a slant trend line, as you will see here. And of course, to confirm that this is a valid reversal pattern, we will need price to break out both the trend line and a level around the 15,200 to capitalize on that uptrend continuation. So now let's scale down into the lower time frame to see how we can capitalize on this bullish move. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. Now, on the 1 hour time frame, this is what we have here. Hold on a second. So this is the neckline we identified earlier. So I would like to make this neckline more emphatic. So we shall be using this one. Okay. So we have something like, so let's thicken this color a little further to emphasize the importance of this. Okay, beautiful. So we have something like this to work with, and we'll be using that purple zone as our neckline for today. Now, remember we had the trend line here yesterday where price broke down, retested, and you see what happened here. We saw the breakdown of this trend line. Price came back to retest, but you can see we have higher lows here. Price was unable to break down the previous low, giving us signs that a buy pressure are resuming around this area. So for me to buy now, I want to see price break out of this area of this trend line, which of course has happened already. So let's mark out some level then, as we shall be using as a confluence to capitalize on that uptrend scenario. Now, let's look at what has been going on here. So we have something around the 15,215. 15,215. So anywhere above the structure, we will continue to look out for buying opportunities here. So you do want to be marking out these levels on your chart right now. So we are going to be looking out for buying opportunities above this area, and if price continues to climb, find new highs, we had more buy position to the 15,233 area to maximize the potential of this bullish move. And if price continues to find new highs, then another breakout retest of the 15,270 will be welcoming more buying opportunities in this market. So this is how we are going to be capitalizing on bullish momentum right here on this chart. Now let's talk about the potentials that the sellers have here. Now, if you are going to be selling the USTech100 today, in fact, I would rather want to see price slicing through the 15,150, taking out all the buy positions here to give us some liquidity to push price to the downside. So this is what I will be looking at to sell the USTech100. And if price goes on to break down the 15,070, that's the lowest point price action has been since the beginning of this week, then we look out for more opportunities to sell. So this is my view here on the USTech100. I don't know if you have any questions. If you do, feel free to let me know right in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into the next asset on our watch list. All right. So, in the absence of no questions, I'll just take this as a confirmation that we're all on the same page. So, we shall be moving right into the next financial asset on our watch list. So the next asset on our watch list for today is my favorite, and that is the XAUUSD. Now on the XAUUSD, we have been profitable anyways on this one. We had the buy position since the beginning of the week, and in fact we had a couple of more added along the line as we saw price continue to find higher highs. Now remember, the first buy position we had was around the 1927.50. We added one more here at the breakout of the 1930. We added one more at the breakout of the 1934 before this bearish momentum began during the New York session yesterday. And for those who have been part of this profitable journey, well done to you for being on standby to capitalize on that move. Now, if you were with us during our live session yesterday, we talked about how this ascending trend line will be serving as a key parameter in determining our trading decisions for this week. And of course, you know how we use our ascending trend line in this community. Whenever price remains above the ascending trend line, we feel comfortable in our buy positions, while we also look out for more buying opportunities. And during our live session yesterday, we talked about the potential breakdown of this trend line, that if breakdown retest happens, we want to be getting ready to sell. And look at what happened here during the later part of the New York session. We saw the breakdown of the ascending trend line. Price came back to retest the trend line, as you will see. Then price went on to break down the $1,930.50 level, a level which we identified yesterday as an area where we want to be having our sell stop to capitalize on the bearish move. And in fact, we saw price move about 28 pips to about 30 pips before this bullish momentum came in. And of course, if you had moved your stop losses accordingly, you will be taking out at the worst case scenario break even on this one. So at this point in time, I really do not have any trade running on the XAUUSD. And how are we intending to capitalize on potential opportunities today? Now let's run through the 4 hours time frame. Let's see what's going on there. Then we come back to see how we want to capitalize on a uptrend move. Now, on the 4 hours time frame, we acknowledge here that at the beginning of the week, that price has been finding lower highs in this market since July. And to emphasize this, we have a descending trend line identified here. But one interesting thing happened here in the last 3 weeks now, I guess. We can see that despite the lower highs in this market, price is yet to find a lower low to confirm the strength of the buyer of the sellers. Instead, what we have here is a higher low, as you will see. The lowest point we had here is 1885 zone, and the next one close to that area is the 1900 area, giving us signs that buyers are likely going to be breaking out of that descending trend line this week. And of course, that was what happened. We saw the breakout of structure. We, of course, took advantage of it as we rode that move all the way up before that bearish momentum began. Now, with the scenario we have right now, we have a breakout of the descending trend line happening for the first time in the last couple of months, as you will see here. Now, will price remain above this level to continue the uptrend continuation? So that's the question we want to be asking today. Or is price going to drop back below the trend line to incite a sell-off? Now, let's scale down into the lower time frame to see what is really going on in this market. Now, scaling down into the 1 hour time frame, this is what I was able to spot this morning. Well, the first thing I did here was to acknowledge the bearish momentum since yesterday, and to do that, we connected a series of lower highs, giving us a beautiful descending trend line, as you will see on your screen right now. And whenever we have trend lines like this, especially a descending trend line, we want price to stay below the trend line to feel comfortable in our sell position. But right now, we have been taken out of that sell positions as price action has broken out of that descending trend line, and of course the $1,930.50 area. And for me, this is a good sign that we might likely be seeing a reversal pattern pushing, a trend continuation pushing price further to the upside. Now, with the situation we have here, as long as price remains above both the descending trend line and the $1,930.50 level, we shall feel comfortable in a buy position. So at this point in time, I want to be seeing something like this. So if you had missed out on the breakout of the $1,930.50 area, then you want to wait and see if the market will come back to retest the structure, and the appearance of buy pressure here will be beautiful enough for us to join an uptrend continuation. And in fact, we have multiple levels here that we can use to maximize the potential of this bullish move. So we have the 1934, we have the 1936, all of which a breakout retest of these levels or zone will be welcoming more buying opportunities in this market. So this is how we are going to be joining a potential uptrend continuation if price continues to find higher highs and higher lows from this structure. However, if sudden pressure comes back in and price drops back below the descending trend line, then we want to be positioning ourselves just right below the $1,927.50 level, which I will consider to be a seller's territory, as price will remain below that trend line. And if this happens, we want to be joining that bearish momentum to the downside. And in fact, we also have multiple levels here that we can use to maximize the potential of this bearish move. So we have the $1,927.50, we have the $1,925, this is our key level for this week, and of course we have the $1,922.50 level. So let's mark all these levels out on our chart, as we will be needing them as a reference point to guide our independent trading decisions. So this is my view here on the XAUUSD today. So you can see how crucial this descending trend line is. In fact, you want to be marking out this trend line, as it's going to be a major parameter in determining if we are going bullish or bearish. And I said here, if price remains above the trend line, we still feel comfortable in a buy position, and of course above the $1,930.50 area. So this is the crucial juncture in this market, both the descending trend line and that level at the $1,930.50 level price remain above the structure, we feel comfortable in our buy positions, while we also look out for more buying opportunities. But if price drops below this area, then the potentials of sellers will be increasing. But I will need price to drop further below the $1,927.50 level, break down retest of that structure to confirm the downtrend. But at this point in time, things are looking very bullish, so let's hold on to a bullish bias and look out for more opportunities. But if price goes the other way, then let's get ready and prepare to be part of that move. So that is my view here on the XAUUSD for today. If you have any questions whatsoever as regards to the current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever as regards to the current setup. And if there are, drop them in the comment section and let me see. And after that, we will be going right into the last and next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the last asset on our watch list for today. So the next asset on our watch list for today and the final one is the USDJPY. And in fact, we have an intriguing trading setup here on the USDJPY. And since the beginning of this week, price started the week on a very choppy note, as we saw price confined within a range most of the first half of the week, as you will see here. That was between the 147.890 and the 147.600 to give us an insight into the uncertainty in this market. And of course, this does not come as a surprise to us all, as we know that everyone in the market is looking forward to the interest rate decision. And whenever we have a major event like this, there will be some low liquidity in the market, where price, of course, goes into an indecisive phase to reflect the nature and psychology of participants in the market at that point in time. And of course, you know how we do it in this community. Whenever we have price falls into this kind of range, we want to exercise patience, waiting for a signal, which will come in the form of the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now, before we go into the details here that led into this bullish momentum, I would like to refresh our memories on the higher time frame on what we saw. And remember, for those who are part of our session, we noticed an uptrend continuation pattern in the form of an ascending triangle. So I will show you that in a moment. Let's scale up into the 4 hours time frame. Now, this is the 4 hours time frame right here. And remember that at the beginning of the week, we had this 147.950, which was serving as our key level for the week. And of course, you know how we use our key levels in this community. When price breaks out of our key level, we look out for buying opportunities. And if price remains below our key level, we keep the option of sellers open. Now, in addition to that key level was this interesting reverse uptrend continuation pattern. So we saw this impulsive move that brought price into this area, We saw an horizontal line where we begin to see certain pressure since the beginning of this month. And then we have the scenario right here giving us a beautiful ascending triangle. And you know how we do it. Whenever we have an ascending triangle like this, we expect a breakout of the resistance line retest to structure to confirm this uptrend scenario. And of course, if you look at what has been going on since the beginning of this month, we saw how this level had been a barrier for buyers. And one thing for sure we know is that if this buy pressure continues knocking the ceiling, at some point it will cave in to welcome that bullish momentum, which appears to have happened in the last 4 to 5, 6 hours now. Now, will this momentum to the upside continue? Well, we shall be dissecting that when we scale down to the lower time frame. But before I scale down to the lower time frame, I also want us to acknowledge this ascending trend line, which has been supporting this bullish momentum since the beginning of this month. And as long as price remains above that ascending trend line, we shall feel comfortable in a buy position. And the only criteria or condition that will make us consider selling the USDJPY is for price to breach that ascending trend line. And in fact, if price breaks down the ascending trend line, this will be the first time price will be breaking down that structure since the beginning of this month. And of course, this will be a beautiful opportunity to join a sell-off. How far will that go? We don't know, but we have levels that we will be using to guide our TP target. So we have one around the 146.500. We also have at the 145.00 area if price decides to drop and nosedive. So with the information we have gathered here on the 4 hours time frame, I think by now we begin to understand the psychology of participants in this market. Now, to have a better perspective into what is really going on around that our key level, which also serves as the resistance line of that uptrend continuation pattern, we would need to scale down into the lower time frame. Now, scaling down into the lower time frame, so we will be going into the 1 hour time frame for this case scenario. Now, let's look at this closely. Now, zooming right in. So we have, hold on a second. So we have the 147.950, that is the key level, and of course the resistance line of that uptrend continuation pattern we identified earlier. Now, remember, we have been buying since this breakout of the 147.720. We added more positions at the 147.890, and of course we added one more at the 147.950. And of course, if you had moved your stop losses accordingly, you must have been taken out from all the buy position with a moderate size of profit or at a worst case scenario break even. But that doesn't matter right now, as we want to see how the market will be reacting to the zone. Now that we have a breakout of this resistance line for the first time this year at the 147.950, will this become a platform that will drive the uptrend continuation? Now, from a technical standpoint, whenever price breaks out of a key structure such as the 147.950 in this case scenario, we expect that at some point in time that price will come back, retest the structure that was broken, which interestingly lines up with that ascending trend line that has been supporting this momentum since the beginning of this month to incite an uptrend continuation, where a further breakout of this previous high will be welcoming more buying opportunities in this market. Now, price is back into that zone. As you will see right now in the last 1 hour, we've seen price drop back into that zone, which also lines up with that ascending trend line. Now, in this case scenario here, we want to exercise patience to see how the market participant will be reacting to this level, this zone here, to decide what our next line of action will be. Now, at this point, you would agree with me that we are at a crucial moment in this market where anything that happens here is likely going to be dictating the pace going forward. Now, like I said here, we want to wait to see how the market will react. And personally, I want to see something like buy pressure around this area. It could come in the form of a double bottom structure, head and shoulder inverse if it may be, but we want to see signs that sellers are finding it difficult to stay below the 147.890. And if this happens, hold on a second, please. Sorry about that, please. So we want to look out for buying pressure. We want to look out for signs that sellers are finding it difficult to stay below both the ascending trend line and the 147.890. And if this happens, price remains above that structure, then we look out for buying opportunities above the trend line. But if it so happens that price drops below the ascending trend line, and then we saw retest of structure where we see signs that buyers are finding it difficult to climb back above both the ascending trend line and the 147.950, then price would have broken down that ascending trend line for the first time this month to incite a sell-off in this market. So you can see how crucial the zone is right now. So our center of focus for today is between the 147.950 and the 147.890, which interestingly shares a confluence with that ascending trend line we identified on the higher time frame. So we shall exercise a lot of patience here. Let's see how the market will react to the structure, and whatever happens here will decide what our next line of action will be. So I encourage you all to mark out these levels on your chart, as you will need them as a reference point to guide your independent trading decisions. So if you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we draw the curtain for today. So I would love to see your comments if you have any, and let's see how I can help. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in fact, it has been a wonderful day with you guys here this today. I'm really grateful and appreciative for being with you today. And in fact, we were able to attend to four major financial assets as we prepare for the New York session today, which includes the US All Spot, the USTech100, popularly known as the NASDAQ. We also attended to the XAUUSD, popularly known as the Gold Spot, and of course the USDJPY, all of which we were able to identify simple setups using fundamental tools such as trend lines, key levels, and chart patterns to strategically position ourselves ahead of today's trading session. And remember that we have key events coming up much more later in the day, in about 6 to 7 hours from now, and that is the US Fed's interest rate decision, which even the anticipation of the event alone has an influence on price action. So let's ensure that I encourage us all to stay focused and allow our structures to mature before we jump into any positions. For those who joined us for the first time today, I hope you had a wonderful moment. I hope you were able to gain one or two things from what we discussed here today. In fact, I encourage you to be part of our subsequent editions, as the more time you spend with us here, the better you get in understanding how this works, and eventually be able to use the information you have gathered here to make your own independent trading decisions. So I wish us all the best of luck today. Ensure you move your stop losses, secure your positions. Every trade you make, ensure you have your stop losses in place, and ensure you have a well-defined risk strategy that wouldn't affect your temperament even if the market is not going your way. It's on this note I wish you the best of luck, and I look forward to seeing more of you tomorrow, as usual, 10 a.m. UTC, 11 a.m. West African time, as we come back here again to review how well these financial assets have been doing and at the same time get prepared for tomorrow's trading session. Do have a wonderful evening, everyone. Bye bye.